Order, order. Welcome to the Treasury Select Committee on Tuesday the 2nd of June 2026. We're here to start our inquiry into student finance, and we're very pleased to have had 52,000 expressions of experience from mostly graduates who've written in about their experience of the student loan system, particularly Plan 2. We've also had 300 other bits of written evidence sent in from various bodies, so I want to thank all of those who've contributed. And I'm delighted to welcome the first panel of two today to discuss the issue. So from my left to right, we have Toby Whelton, who's the Senior Researcher at the Intergenerational Foundation. Next to him is Kate Ogden, who's the Senior Research Economist at the Institute for Fiscal Studies. Sir Philip Augar he chaired the 2019 independent panel report to the review of post-18 education and funding in England. So it's the man who's really looked at this in great detail. And finally, Vivienne is the Chief Executive of Universities UK, which obviously has a strong interest in this and has over 25 years of experience working in the higher education sector. So thank you very much indeed for coming. And we will have a second panel later with other panellists, and we'll have a short break in between. But I wanted to start, if I could, with you, Sir Philip, because you've looked at all of this in detail. And then one of the big things that came out of the people who've written, the experience of people who've written to us, is that the high rate of interest is one of the things that's caused particular unhappiness, particularly on Plan 2. Can you just perhaps outline your thoughts on the levels of interest rate and how that also plays into how the scheme should fund itself, and how that compared, and also the impact that has having on students or postgraduates when they're having to repay it?
Oh, thank you very much, Chair. That's a very broad question. I think one has to start with the public-private balance in terms of funding tertiary education, and I think one has to start with a set of principles. The present government set out its principles for post-16 education in the Skills White Paper of last autumn. They said that the state accepted responsibility for education up to the age of 18, that responsibility for adult skills would be shared between the state, employers and the individual, but that individuals would take responsibility for tertiary education, that's further and higher education. What hasn't been specified is the balance of responsibility for tertiary education between the state and the individual. And the panel that I chaired recommended a 50-50 split, which we felt was broadly the right balance, reflecting the benefits that individual graduates derived from tertiary education with the benefits that the state as a whole derived. That was the balance we recommended. The balance since then has tilted very firmly as far as higher education is concerned towards the individual. And for the Plan 2 students the Plan 2 graduates that you mentioned, Chair, that balance is really very firmly now in favour of the individuals. Depending on whose numbers you believe, it's something like 95% individuals' responsibility to at least 75%. That balance, it seems to be, needs to be corrected somehow. How one does it, whether it's through the interest rates, sorry, this is a long answer to your original question, whether it's that addressed through the interest rates or the thresholds or some other means, that is a complicated subject.
And it's worth noting that the OECD has looked at this, and the UK has the highest level of private contributions to higher education in the whole of the OECD, so it is tilted much further than perhaps people even realise. But just on the level of interest rate, would it be better, do you think, if people paid higher initial fees and then no interest on the loan, so that graduates psychologically didn't feel the pressure? One of the things that very much came out of the evidence is that psychological pressure of the growth of the loan and the capital not being paid off. So do you think that's a potential option?
Again, it's a good question, but I just wouldn't start there. I think the first thing that has to happen is that there needs to be a public debate about the balance of contribution, and I very much welcome this committee's inquiry. You are beginning that debate. And I think that once we have an understanding of that, then we can decide whether the correction, and there needs to be a correction, I think, for Plan 2 loans. I'm happier about Plan 5, actually, but for Plan 2 loans, whether that is addressed through thresholds or interest rates, that is a matter for quite sophisticated modelling. I don't have access to that.
Okay, well, we'll come on to thresholds in a moment. Kate Ogden, do you think there is a justification for higher interest rates while people are actually... is there a justification for having high interest rates while people are actually studying? Because one of the hallmarks of this particular scheme is that you're accruing interest while you're not earning, well, mostly not earning, but while you're actually an undergraduate.
So I definitely think that a zero nominal rate would be very bad. That would have the effect of meaning the government would lose out on loans even if they were fully repaid. So there's a kind of a strange subsidy in that system. On higher interest rates while people are studying, I think you could think they were a good reason for they serve kind of two purposes. One would be meaning that even people who paid off very quickly still repaid some interest. And another would be avoiding people taking out the loan, putting it in a high interest savings account and profiting. So we don't want an interest rate that is so low while people study that becomes something that worth them doing. The RPI plus 3% that applies to loans while people study is now only the case for newly issued loans if they're issued to postgraduates. So for new undergraduate Plan 5 loans, the interest rate while studying is only RPI.
Okay, so you think that's about the right balance from your analysis of the figures?
I think RPI while studying makes a lot of sense. In general, RPI, I think, is not the right thing to be using for the interest rate on these loans. I would start with government borrowing costs. Perhaps 15-year gilt yield, something like that. That would then mean if they were repaid in full, the government's not profiting off those loans, it's meeting its costs.
Okay, because meeting the costs has got to be part of the system. So perhaps I could just go to you, Toby Whelton. One of the discussions about particularly Plan 2 is that the interest rates are very high and much above inflation once people have graduated, so that they're just seeing that capital go up, so they're only just chipping in at the early stage of their career, quite often just chipping into paying off the interest. Is there a justification for that, do you think?
Yeah, I struggle to see a justification for above inflation interest rates. The only premise that kind of predicates them would be a cross subsidy, so higher earners pay more than the loan they take out in order to offset the write-offs for lower earners, and I don't think that is a fair and sensible system. There's no reason why the subsidy should come from within a singular cohort, especially when it only comes from those that took out student loans. We know 10% of students don't take out loans to begin with, so they are exempt. Those that go on to have very high earnings early on in their career pay off the loan before the interest meaningfully accumulates. So that cross-subsidy is covered by a very kind of niche, kind of somewhat arbitrary section of the graduate pool. And so student loans and interest rates is a very poor tool of redistribution. If we do want to subsidise low earners, I believe it makes far more sense for that to come from a general taxation where kind of all taxpayers and generations can contribute.
Do you think that there should be a graduate tax then? Is that what you're saying?
No.
No. Okay. Vivienne Stern, any thoughts on that point?
First of all, I think Sir Philip's point about balance is very important, and I think the fact that the committee has zeroed in on this question is great. To the point about the interest rate, the reason I think that the last government ended Plan 2 and moved to Plan 5 was because they could see that even if there was a sound argument for it, an argument that it was a progressive design, it was politically unsustainable. It caused a great feeling of unfairness. And that's why the Plan 5 terms as they are as they are. Mm-hmm. I agree with Kate that it's really not quite right that RPI is used for the measure of inflation in Plan 5. It should be CPI. I think there is a plan to bring the two into line, but not till 2030. And I know that some of the submissions, including from Professor Nick Barr at the London School of Economics, who's one of the original thinkers behind the current scheme we've got, would suggest that the government's rate of borrowing would be a sensible mechanism to use. It has to feel fair, and I think it has to also be transparent for people who are taking out loans. They need to sort of know what the terms are going to be, and if the system is over complex, you compound the risk that it's poorly understood. And if you change it continually over time, as governments have done, generally to shift the balance in who pays from the government to the individual, that also doesn't feel fair.
Okay, so I mean, it seems that if I'm right, all of you are saying that RPI, or you've implied the RPI is the wrong measure, that you'd prefer CPI. Everyone agree with that, Sir Philip?
I'm agnostic on that.
Okay, but just for the record, the others have nodded in agreement.
I might go for CPIH, but we're
Okay.
splitting hairs.
When you ask a researcher on these issues, it's never going to get quite such a straightforward answer. I get that. And then generally, is there? So that would help you see what you would consider to be a fairer interest rate. Just a general view there with Vivienne Stern. Yeah. And Toby, well, fantastic. Thank you very much indeed. John Glenn MP. Oh, sorry, Dame Harriet, just yes.
One question, which is that it's very interesting to hear this description of the balance between what the state pays and what the individual pays. Does the panel have any strong views about what the balance should be in terms of the number of people going on to university, or do you think that's outside the scope and remit of your evidence here today?
Sir Philip.
I think it's a really, really important question because we run the risk of focusing excessively on the 50% of young people who go to university and insufficiently on the 50% or so who don't. And it was a point that the panel I chaired made very strongly. Since we reported in 2019, some progress has been made towards closing that gap by this and by previous governments, and I very much welcome the present government's sort of shifting of the target from 50% to higher education to 60% into kind of tertiary education, I suppose one will put it. So I think it's really important to bear it in mind that we are talking about some graduates who've been what I feel disadvantaged by recent tweaks to the current system. But let's not forget, if you like, the other 50% and the people out there in the workforce, who need adult skills, retooling.
Anyone else got Kate Ogden?
I completely agree with Philip. We need to pay more attention than we do to the 50% who don't go. I think this question about balance of cost, though, when we're talking about Plan 2 graduates, the vast majority of those have already graduated. So when we're worried about how many people go to university and whether we're getting that level right with the loan system we have, actually the people who think the loan system is unfair, they've already made the decision to go. So there's the kind of balance of costs amongst people who've already graduated, I'd see as slightly distinct from the balance of whether we're getting the right number through the door.
Thank you. Any more, Dame Harriet? Thank you very much, Dame Harriet. John Glenn, MP.
Yes, could I turn to the issue of changing terms and conditions? And so, Philip, you have a background in financial services, and obviously we recognise that Section 22(2)G of the Teaching and Higher Education Act explicitly permits the modification of loan terms during the currency of such loans. But when we did our survey, we found that 57.3% of student loan holders didn't understand the terms and conditions. If this was a financial services product, there would be outrage. And if I was back in my old job as economic secretary, I'd have every MP writing me to saying, you need to do something about this provider. How do you see this issue? You've obviously looked into it in depth. Please tell us how we should see it.
Well, whilst I wouldn't recognise the actual number of the clause that you cited, I do recognise the terms. But I still think and technically that's probably right, but I actually share the general outrage. The Plan 2 people signed up for terms and conditions that were not properly explained. I mean, it was there in the small print, but I mean, really, you had to be right into the small print to get this. And I think that a financial services organisation has a duty of customer care, as you will know, Mr. Len, and that really ought to apply to government in the context of loans sold effectively to young people making the first important financial decision of their life. I share the outrage you would have felt.
So, in effect, if it was a conventional financial services product, the government would be at risk of regulatory and legal action, wouldn't they?
Well, if
Not, I mean, all governments. I mean, it's not about this particular one.
It's all government. But, I mean, legal action is precluded by the clause that you cited. But, I mean, there's a moral issue here. You shouldn't be retrospectively changing the terms in quite a complicated, almost sneaky way, bit by bit. I don't think there were bad actors in this, but it's just each administration has made a small change. You add them all together, you compound them, and you get the current distorted situation.
I mean, in DFE promotional materials in 2020-21, for this would be Plan 2, DFE materials explicitly promise the repayment threshold will be adjusted annually in line with average earnings. I mean, that hasn't happened, has it?
Absolutely. I might point out that the panel that I chaired and we reported in 2019 proposed some changes to student loans terms and conditions, but we were quite specific that these should affect only future cohorts, future plans, and I still adhere to that view. I agree with you.
If I turn to Ms Stern about this issue, and is there anything you'd like to say about the impact it's had on students of these changing terms and conditions? Do you think students understand the conditions of their loans and that they could have been changed as they have been?
This is a problem that has dogged the way that we fund higher education participation since the early noughties. And many of us who've been involved in various iterations of that have, you know, we've failed in making a very simple argument, which is that the language of debt and loans has always been misleading to graduates. The actual quantum of your loan doesn't determine what you pay. What determines what you pay is your earnings, and that you know, there are protections there, which means that if your earnings are relatively lower, at a certain point your debt is wiped. And so I'm with Martin Lewis, who has argued for 20 years that this should be described as a higher education contribution scheme. And I think it speaks to the point that Sir Philip put on the table right at the beginning. The intention was never that these loans were fully repaid. The intention was that we as a nation have a stake in you deciding to go to university. You will benefit, but so will we. If I walk out of this room and get hit by a bus, it's a graduate who will scoop me up. It's a graduate who will put me back together over the road. You know, we're all dependent on people taking that personal decision, you know, risking their time and money. And so the state should stand behind them as they do so. All of us, any one of us, could find ourselves unable to work tomorrow. It's important that we have protections in place for that. Describing it as a contribution scheme would make it clearer to graduates that this isn't like a mortgage. It's not a credit card debt. But there's a second issue, which is the one which I think Sir Philip was speaking to, which is, should you tinker with the terms? Yep. And I think that my argument would be, it should be clear at the point that you take out this financial support to study free at the point of entry, what might change and what might not. So if you did what I think Kate was suggesting, using the government rate of borrowing as the interest rate, then it would change. It would change as the government rate of borrowing changed. But if you make that clear, perhaps that's acceptable. I think it should be clear what will not change and what will change. And that's, I think, a kind of transparency that's been lacking. I also think one of the reasons that this scheme is flawed is it's so complicated that when the Treasury reaches in to take £5 billion from the repayment scheme to spend on something else over there, nobody notices. You know, Wonky, our little higher education blog home, will kind of hop up and down, and the rest of the world carries on as though nothing's happened, and that's not right. We need more transparency.
Isn't it probably true now that, I mean, I have been in the Treasury, I recognise that depiction of it, but isn't there a situation now where all the universities you represent, all the students under them, have now got to the point where their graduates have reached a point of, you know, this can't go on? I mean, I think we've reached a point where, as I heard George Osborne say, for example, you know, started taking a little bit here and there, but it's gone too far. Yeah. How would you respond to that?
So I'm strongly in the walk it back camp. That we've gone to. We started with when I went to university, 100% of the cost was paid by the state. In 2004, when the first income contingent loan repayment scheme was sort of introduced, or the variable tuition fee was introduced, the balance was about 70% the state and about 30% the individual. Around about the time that Sir Philip was conducting his inquiry, the balance was nearer 50-50. It's now 70% the individual, 30% the state, depending on whose figures you believe. And to Sir Philip's point, we probably don't have time, but nobody knows how the Treasury makes these calculations, because the Treasury has a data set nobody else has access to. So there's an issue in that. But the point is the balance is wrong. And the reason we should be concerned is that the history of this has been that people have been worried that the loan and finance system will put people off going to university. And as I've argued, we all need people to go to university. Our economy is changing. Lower skilled jobs are going to be replaced by higher skilled jobs. If we get to a tipping point and it starts to look like a bad deal, that's a problem for the whole of society, not just for the individuals who might lose out. That's not what has happened to date. Last year's UCAS application cycle was a bumper year. It was a record year. But we are, I think, at risk of reaching the tipping point you described.
Thank you. Ms. Stone, you mentioned this asymmetry of information between what the Treasury know and what independent researchers and universities and so on can know. To have this debate about fairness, do you think that the Treasury should be sharing more information, anonymised information, about the repayment loans?
I think there should be transparency on a regular basis, and we should expect the government to show it's working and make that data set available to respected, I'm going to just say the IFS, and that's probably other think tanks are available, or economic modelling agencies are available. But and I think there should be some sort of annual scrutiny of the balance in contributions between the individual and the state, so that it doesn't happen in the dark.
And I presume, just following...
Ogden wanted to come in on that.
Yeah, I guess a particularly egregious example of the tinkering of terms was the recent freezes of the budget. There were actually two freezes. They froze the repayment threshold, which did get some press, and they froze the interest rate thresholds that determine the RPI to RPI plus 3% that's added. That second change wasn't mentioned anywhere in the Treasury budget documents. We had to go and ask them. It was in the OBR costing, so they did get the £1 billion of savings from it.
What really strikes me about what you've both said is this lack of transparency and the idea that people going into the loan plans don't know, well, firstly, they can't predict if there's going to be retrospective changes, but they also might not know the whole conditions, and that did come across in the submissions. Has there been any evidence that when the government has made those tweaks, say to thresholds, or even change between plans, that has been communicated down to students and even affected the behaviour of students? Ms. Ogden.
The change of plans, I think there was a significant effort at least to communicate that at the time. That doesn't mean that current students realise, or new students realise, that they're not on the same plan terms as those that are getting all the media attention. So I still think there's a risk that the wider debate about student loans being unfair, even if people mean Plan 2 loans, that kind of current prospective students don't realise it's not the loans that would apply for them. I guess on the constant tinkering and the call to maybe walk it back, then it's really difficult to say what terms any individual might have expected reasonably when they took their loan out, because the terms have changed so much over the past 10 years. So in 2018, nobody talks about this, in 2018 Theresa May increased the repayment threshold from 21,000 to 25,000. So if you'd gone just before that, you had a nice surprise from the government. So I think even if you were going to give people the terms they might have reasonably expected when they took the loan out, doing that would be very arbitrary across cohorts.
Philip Augar.
Thank you. Just on the question of transparency, I think it would be helpful if there was more transparency from the official side. I think it's also important that universities are more transparent about graduate outcomes. This information is available on a little-used website called Discover Uni. It's complicated to navigate, it's clunky, it looks as though it's designed by someone of my generation rather than the kind of my grandchildren who will be using it. And so I think that transparency on both sides, actually, Treasury, DFE on the one side, universities too, so that young people considering going to university are able to judge correctly what the earnings outcome has been for past cohorts, and to compare between similar universities offering similar degrees. There is a vast difference. So I think transparency, great, but all round, please. Thank you.
And one final question, perhaps for Mr. Whelton. The discussion that my colleague John Glenn raises about the Treasury's tendency to go in and tinker is also a political question, because partly because of the technicalities and otherwise of the student loans, it perhaps is seen as an easier target than taking money from other parts of the tax and benefit system for perhaps older generations. Do you see that as a political issue with fairness?
100%. I think that's exactly the way I would describe it. I think transparency is key, and but it's no panacea. I think if it kind of implies that if graduates didn't know what they were getting into, there wouldn't be a problem. But it's not just that they've been misled in some ways, it's the magnitude of change. It's been to the tune of tens of thousands for the average graduate. So I would kind of push back that it's just a case of transparency. And there's a real question of kind of a democratic consent. If the cost of loans aren't realised 20, 30 years after graduation, and the cost we take today to kind of live beyond our means, and kind of, Rachel Reeves a few months ago saying that she justified the decision to tighten the loan terms to get down NHS waiting list. It's a clear articulation of that money is being taken today from young people's futures. So I think it's essential that student loans are seen as an intergenerational issue, how we transfer and distribute resource and burdens throughout generations and throughout time.
I just ask that one of the came, as I think I said at the beginning, came across very strongly in other responses to our survey, 52,000, the psychological burden on this growing loan. Do you think there's a disconnect from people in Whitehall who go, well, more than half of them never paid off, so it's not really a worry, to the actual impact of real people on the ground? Perhaps I'll just go across the panel, Mr. Whelton.
Yeah, it's definitely an issue. I do think the main issue is the very kind of real financial pressure of money that comes out of the paycheck. There are fixes to the psychological burden that would be cost-free. I know in the 2019 committee, the Russell Group argued for loan balances to display an expected lifetime contribution based off previous earnings. To me, I struggle to see any reasons why that wouldn't be a good idea and would somewhat offset the psychological burden.
A job for the student loans company to do.
Yes.
Kate Ogden.
I agree with Toby that a more informative student loan statement would be helpful. I don't think rebranding this from a loan is going to change many graduates' feelings about this product. If you don't change any of the terms and you rename it, I'm not sure that's going to make them feel better. I would say on the burden, the psychological burden, the qualitative evidence from people with Plan 1 loans who have been asked and surveyed properly and their loans were not significantly affecting their lives as far as they reported it in their early 30s. That might be different for a more recent set of loan terms, and it might be different now that the loans have become much more salient.
Thank you. So Philip.
Yes, I agree with all that. There has to be something that can be done about badging the student loan system. Student contribution system sounds right, and shifting the emphasis from that big number, sort of outstanding debt at the bottom of the statement, that needs to be redescribed, represented, and a sort of a cleaner, neater text around it, as actually Martin Lewis suggested back in 2019. There's on their website, they have a very good sort of example of a reworked student loan statement, which I think would be very, very helpful.
Thank you. Vivienne Stone.
I mean, the one thing that I've always been a bit troubled by is the idea that you present a very, very large number which might not at all reflect what you repay. Of course it's an intimidating thing to see a number in the tens of thousands. What matters is how much of your income each month will be taken through HMRC. And if you're on a relatively low income, the repayment is set at 9% above the threshold. There's a side issue here about the thresholds being different for different plans. But if you're on a Plan 5 loan, that's £25,000. So if you're earning £31,000, I bet Kate can actually give you the exact number, but it's probably something like £50 a month. I caveat this with, is that about right?
There we go, Ms Ogden, you've done that maths.
I've got this massively wrong. And I think that for somebody who, we've got an economy which isn't performing brilliantly, costs of living have risen, people's disposable income is constrained. This means more probably in practical terms than it would have done in a buoyant economy where wages were rising fast and costs were lower. I think these things are coming together, but I think it is a mistake to draw people's attention to a very big number which may not at all reflect what they actually pay. It's the monthly repayment that you need to sort of understand, because that's what you're going to have to live with.
Okay, thank you very much indeed. John Gayman, please.
Yes, I want to turn now to the sort of the overall costs, and I'd like to start by asking Kate Ogden, do you have a figure for the total subsidy that the government provides to higher education?
I can be much firmer on what the initial total cost is. That's about 22 billion per cohort of undergraduates. $1 billion of that is teaching grants, 11 billion is tuition fee loans, and about 9.5 billion is maintenance loans. So they're almost as big now as tuition fee loans. Then to understand the eventual subsidy, we need to forecast earnings and employment.
Can I just go back on the maintenance? That's a recent change because of change of policy. The government, which years are you looking at there?
That is 2025.
Okay, so it's
been similar for the last
so a policy change has presumably increased that figure.
Yeah, so maintenance loans have continued to increase each year at the maximum, whereas tuition fees were frozen. So that balance has shifted. Then to understand the eventual subsidy, we need to forecast earnings for 30 or 40 years out. And we need to take a view, crucially for this, on how we value repayments we receive far in the future compared to pounds now. And the answers are very sensitive to that. If we just use CPI, then we estimate 70 to 90% of the loan outlay will eventually come back to government on Plan 5 loans, So that makes the total subsidy for a new Plan 5 cohort 3 to 7 billion, and I'd put an even wider uncertainty interval around that.
Thank you. That sets the scene, which I hope and then Sir Philip and Stern will be able to respond to in terms of addressing how that compares to other countries, and is it the right level? Because this is really what we need to get to the heart of. How much are we as a society and the prevailing government spending on this, and how much is it out of kilter, and what are those proportions, and how should they change? Would you like to address that?
Would you like to start?
I don't mind either.
Sir Philip.
Kate quoted the figures for Plan 5, the Plan 5 cohort, I think, Kate, didn't you? But it's actually the Plan 2 cohort that I think is a really sensitive one, and there the state subsidy, if you call it that, is much, much less. I understand. Do you have that number to hand, Kate? Am I
it really is like counting, isn't it? So Carol Vorden and Kate Ogden.
I don't, and the tricky part is, because, for instance, the tuition fees have been frozen, we actually spent more on earlier cohorts than we do on more recent cohorts. So that and the loan terms have changed. Yes. So to get a good figure for the 2012 starters, you need to do some really fiddly calculations for the first 10 years to try and guess what they've already repaid. So we've kind of steered away from recosting that. But if there's significant demand, we'll go away and do it.
What you did say,
Philip.
am I allowed to respond to Kate?
Please, through.
What you did say, though, Kate, was that in respect of the 2022 cohort, the individual contribution was it 97%, and the state contribution only 3%. That is effectively the privatisation of higher education for that one cohort, if I remember the figures correctly.
Ogden.
It is. But within that cohort, that's some people paying significantly more than the cost to government of what it sent spent to send them, and others paying significantly less. So I'm not convinced that I wouldn't get over-focused on the 97% figure, because for an individual, very
Just
few...
change the terms, because you've got higher earners paying more. It's basically cross-subsidising.
But so essentially we've got, to try and sort of simplify this for people watching, we've got different plans, and then we've got different distribution of subsidy levels within different student cohorts within each plan. So it's very difficult to break this down into an overall fairness, because actually, are you somebody earning 50,000 at 30 on a plan 2, or are you somebody who's earning 32,000 perpetually on a plan 5? Actually, to present this in terms of a policy intervention from a government is quite difficult to do in a universal fashion. I mean, do you have any views on how, from where we are now, we sort of respond to these actual costs in a way that sort of makes a meaningful difference and addresses the sort of complexity that you've already outlined? Sir Philip.
I think the way I would approach this is, I think, first of all, having a look at plan. I would stick to this idea of the public-private balance.
Yeah.
And I'd use Plan 5 as the benchmark. My understanding, it's something like 75-25, which is not the ideal 50-50, but it's better than Plan 2. So I would probably leave Plan 5 where it is, and then simply address the intergenerational unfairness for the Plan 2 people, right. who pretty much all levels face a repayment threshold that is different to the one, as you explained, Mr. Glenn, to the one that they signed up for. I think I would focus on...
You'd focus on Plan 2.
Remediation for Plan 2, and after sort of consideration of the public-private balance for Plan 5, probably endorse that, and maybe some tweaks. But
Ms. Stern?
I think there's a real headache if you go back and try and fix the many decisions made in the past. What we should be doing is setting a set of principles from this point onwards, such that new loans from this point onwards adhere to some fairly straightforward principles, including around transparency and fairness. But can I just pick up your point about the level of investment by international comparison?
Yes, please.
This country is underinvesting in domestic higher education and research, and that is a strategic error. By international comparison, the public investment in higher education is very low, according to the OECD. It means that we're over-reliant on the individual graduate contribution, and we're over-reliant on the fees that universities are able to earn from international students, which we're very fortunate to be able to attract in large numbers, but is an inherently unstable source of income. There are two parts to this problem, though. It's not just about the subsidy on the loan. Over time, the government has almost entirely withdrawn from the upfront contribution towards the cost of teaching through what we call the T grant. Yeah. And it's important that I say the government is about to cut it again. There is a letter sitting in DFE which will be sent to the OFS, maybe in a matter of days, and it will hand a further cut to this little residual strategic priorities grant. That's currently about 1.3 billion. The total higher education sector income is about 46 billion. So you can see the government's putting a tiny amount of money into the system as a whole to pay for teaching. Part of the response has to be to try to recover the government investment in the cost of teaching, particularly for subjects that are very high cost to teach. And if I might just give you one example of that. It costs about £30,000 to train a vet. The university can charge $9,500 this year. They get about $11,000 through the Strategic Priorities Grant. That's the highest contribution you get for any subject, those high-cost lab-based subjects. The rest of it is a gap that the university has to make up through other sources, typically by attracting international student fees. If you look at other subjects, things like modern foreign languages, there's next to no subsidy. So the fee is what you get, and there's nothing to make up the gap between what it costs you to deliver and what you get from the income from tuition fees. I'd love the committee to throw a bit of light on the history of investment in the upfront costs of teaching.
And we may well do that. But can I just draw your attention, Stern, to what Sir Philip said in his review, where he said that generous and undirected funding has led to an oversupply of some courses at great cost to the taxpayer and a corresponding undersupply of graduates in strategically important sectors. Now, you obviously have to represent all the universities and all the courses, but don't we also need a conversation about, the distribution across those, productive and unproductive, which is a very delicate subject, because obviously, people think, well, it's not all about what's the economic return in year 1, 2, 3, but we're trying to guide and comment on the government's dealing of small, confined, finite amounts of money to this sector. How should we respond to what Philip said? And then I'll allow Sir Philip to say.
So we have a bit of evidence that the supply of places in high-cost subjects is growing at a slower rate than demand, right? So it illustrates the point you've just made, that in an ideal world, universities would expand courses in high-cost areas as demand grows, for STEM, for example. That's not happening. So there is an incentive in the system currently.
They can't bear the cross subsidies.
Yeah, you're losing money on those things more than you're losing money on, say, business studies. So why on earth would you massively expand something that is vastly loss-making? My argument would be, if the government reinstates more upfront teaching funding through an upfront grant, they have stronger levers to pull, which would allow them to incentivise and support universities to grow provision that makes no business sense to a university at the moment. But I would say we've got a system which is driven by student demand, and that's fundamentally the right thing. In short, because we're terribly bad at predicting what jobs will exist in the future. So lots of people think, when I started in this career, people used to say computer games design was a nonsense subject. It shouldn't be taught at universities. It was a Mickey Mouse subject. They're not saying that anymore, because we have a massive games industry, and that technology is now being used in defence, in healthcare, in architecture. Everywhere I go, I see games engines being used in other fields. Let the kids decide what to study, but don't distort the university landscape by putting universities in a position where they have to decide, do you want to lose a little bit of money, or do you want to lose a lot of money when you choose where to expand and contract provision?
Thank you. Could I ask Sir Philip to respond to that? I mean, I think Mr. Stern's given a very good example of the change in perception of a course. How do you, when you make this judgment of unproductive and productive, sort of take account of the unpredictability of the evolving needs of the economy, but also do justice to the fact that you can't do everything?
Absolutely. Three quick points in response to that, if I may. I agree with Vivienne that the strategic grant should be protected and should be at least index linked. It gives the government a very important lever. I don't entirely accept Vivienne's characterisation of how much it costs to put on certain courses. In the review that we conducted certainly found that universities were extremely good at spending money, and I've no doubt that they do spend the money they say they do. Whether that is done in the most cost-effective, efficient way, I've always had questions, and I very much welcome, actually, a growing awareness and acceptance of this from the sector under the current sort of generation of vice-chancellors. Thirdly, I think there was some abuse of the system on the part of higher education institutions after fees were trebled in 2012. I think there was a tendency to recruit big numbers in the low cost to provide subjects, and that hasn't always worked out well. And I think universities are aware of this and would recognise this now. So I do accept the bulk of Vivienne's analysis, but it's a little more nuanced in my view. It's a bit not quite as broad brush as that.
Thank you. Philip, I just wanted to pick up on one point that you made in your report, that you said that the government should cap repayments at 1.2 times the original loan payment, and that wasn't accepted by the government. Do you have any thoughts about why and what your feelings are about that being rejected?
It was there were some disappointments in government response to our report. We welcome the renewed focus on FE and skills, and in some aspects of the approach to HE, but that was a disappointment, as was the reluctance to reintroduce maintenance grants for disadvantaged students. The 1.2 cap, the purpose of that was actually to try and give some protection at the very highest earners. The highest earners are actually often vilified in this debate about student finance, but in fact the whole system falls over unless you have those who repay their loans completely. And you have to be careful here, because it's not beyond the realms of possibility that private sector providers could offer alternative student loans to those the state provides. They would offer them to the high-earning lawyers and bankers, and that would leave the state funding everyone else with a bigger write-off. It's a very, very complicated sort of equation, and that was the thinking behind that 1.2 cap.
And there certainly used to be things called career development loans, I remember, for people doing often post-grad or further qualifications. Are you surprised there hasn't been more of a private sector intervention into the market, given the state of the loan system as it stands?
Obviously, that the private sector finance would come from a sector that has been sort of reorganising and retooling after the great financial crisis. And I have no knowledge of this, Chair, but I wouldn't be at all surprised if banks or private credit providers are looking at modelling the student loan repayment profile and contemplating whether an alternative to the state product is available. That would pose a serious problem to the student loan company if that happened.
Well, I mean, if you do some mystery shopping, you can get a £25,000 loan at a lower interest rate than, I mean, obviously it wouldn't cover the whole cost, but could make a dent if you had I suppose you'd have to have the family backing or some sort of career trajectory, like being a vet, that would help. I just wanted to go back to the point that a number of you mentioned that the Plan 5 loans are fine, or better than Plan 2. But I just wanted to just go through, and I thought maybe Ms Ogden, you could get your pen and paper out ready. So Plan 2, just for the benefit of anyone perhaps is not over the details. So Plan 2, the repayment threshold is at £29,385, and the write-off date is 30 years after graduation. And those who pay it off, and we estimate 32%, I've heard 39%, but it's fewer than 50%, less than 50% of students pay it back. Plan 5, and just to be clear for anyone watching, the plans 3 and 4 were postgraduate and Scottish plans, so that's why we jumped straight from 2 to 5. Plan 5, the repayment threshold is £25,000, and it's paid back 40 years after graduation. The write-off date is 40 years after graduation, and the estimate of the percentage who will pay it off is 56%. So, those are facts at the margins. They're estimates. Why is Plan 5 so much better? Because it's a 40-year burden, isn't it, for students? So, or graduates.
Yeah, so there are 3 differences. There's the lower repayment threshold. That means people start paying it earlier. There's the longer term, which means lower earners pay it for longer. There's also a lower interest rate on the loan, though. It's just RPI. So that means you never get people with Plan 5 loans repaying more than they borrowed in RPI real terms. That's the thing that you think it makes it better, Kate. Ogden. That makes the system more neutral, and that might be what you want a loan system to do. If its purpose is to fund higher education, maybe you want students to make their choices however they make them, and you don't want to charge them necessarily more than it costs you to lend to them. If that's true, then you prefer Plan 5. Okay. You probably don't prefer Plan 5 if you're a low earning graduate, because you'll repay more over your lifetime. It goes on for 40 years. That takes you to pretty much retirement-ish age. Yeah. If you graduate in your early 20s, you're in your early 60s, just before you hit retirement. Well, by then you might be hitting retirement much later. But so Philip, on that point,
I agree with Kate on that.
Vivienne's done.
Yeah, and I think it's important to point out, if we are arguing for a better balance, Plan 5 is not the model you'd pick, because the subsidy is less than the subsidy on the Plan 2 loan. But the terms, I think, it'll be interesting to see whether, as the cohort of learners who are on Plan 5 loans acquire positions of sort of power and influence, whether we get a version of this argument amongst Plan 5 borrowers who feel that they're unfairly treated compared to previous cohorts. I think
And Toby, Whelton, I mean, intergenerationally, you're going to have a cohort of Plan 5 graduates getting close to retirement before they pay off their student loan at the same time they should have been paying into their pension. I mean, have you got any thoughts about
Definitely, I'd push back against the clear characterisation of Plan 5 being absolutely better. As Kate mentioned, for low earners it would be far worse. You know, we done our own modelling, and low earners will pay 20,000 more in expected lifetime repayments.
Have you done any analysis of how that might affect, for example, their pension savings?
Yeah, well, another interesting point. So we know pension contributions ramp up when people go into their 50s, but because of the lower threshold for Plan 5, it will actually locate more of the burden in the early years as well. So they'll start repaying back earlier. And this is when young people are already facing, you know, pressures of finding their feet and prolonged adolescence, of, you know, insecure living arrangements. They don't have the savings cushion. They might not have, So we're putting more pressure on young people at the start of their life when there's the greatest opportunity cost, where money invested into a pension would have longer to compound and return. Yet we're also making some graduates repay into the 50s and early 60s. So I would hesitate in a kind of appraising Plan 5.
Okay, so I mean, so you've got Plan 5 versus Plan 2, but in the intergenerational aspect of it, you could have a ticking time bomb for the next generation of pensioners, which will cost them and the state.
Definitely. I think Vivienne's spot on that we'll only truly know how it's received by students and graduates, 10, 20 or 30 years from now, which is an inherent problem of the system, that kind of the cost replacing on younger generation only materialises, decades into the future.
Indeed. So there's a problem for a future government, which often governments of the day don't worry about. Perhaps I make that observation. Sir Philip.
Toby makes some good points, but I personally endorse the 40-year repayment period. I think that if we're exacting a graduate contribution, they should contribute for the period in which they are enjoying the benefits, and that seems to be a 40-year working life, the way things are going. But in respect of the threshold, I think it's important that we commit to index linking the threshold, the earnings threshold, absolutely, and no ifs and buts going forward, and that should actually then start to offer some protection to the lower earners.
Okay, thank you. Thank you very much indeed. John Glenn.
Yeah, I just wanted to now focus on the marginal tax rates that effectively prevail for some of these graduates, because the evidence suggests that what we're actually doing is leaving some in their 20s and 30s with some of the highest effective marginal tax rates. I just wondered if Ms. Ogden, you could set the scene a bit for discussion on this subject. What do those marginal rates look like? We've seen a lot of evidence, saying that they're very high. Are those complaints justified, and who is most justified in feeling aggrieved at the high level of marginal tax rate, i.e. the combination of the actual income tax, national insurance, and their repayment?
So if you count student loan as a marginal tax, which I might turn to in a second, because I'm not sure you should, then there are some very high marginal tax rates in our tax system. The UK tax system is particularly unusual for putting very low marginal tax rates on low earners and much higher ones on high earners than even Scandinavia does. So if you're really interested in high marginal tax rates, you'd be looking at the high income child benefit charge, the personal allowance taper at £100,000 and the loss of eligibility for childcare support at £100,000 that causes a really damaging effect there. Why do I say I'm not sure you should think of student loans repayments always in the same bucket? For those people who don't fully repay their loans, who can be expecting to pay this for the rest of their lives, for them people this does operate like a tax, and so the extra 9% does add to their kind of effective marginal tax rate in some real sense. For people who can expect to fully repay the principal and the whole of their loan, extra money they repay now is money they're not going to repay later. So it's not like they're giving an extra pound to the taxman that just disappears. Though their repayments now are actually reducing the burden they'll have in future years. So for those people, I don't think it's quite right to think of it as an addition to their marginal tax rate. It's not changing their reward to work, it's moving income, it's moving their repayments in time.
In reality, if somebody is in that position where essentially they're earning more money, so they have to pay more money back, it affects their behaviours, and it affects the impact on the economy. and sort of potentially productivity. Do you have any observations about that, or is that just a relatively small cohort of the overall?
So with Plan 2, it's a majority. We don't think we'll pay it back. So for a majority of people, it does make sense to think of this as a tax. But for the kind of small group of high earners with very high earnings potential, doctors, for instance, I'm not sure for those people it is quite a tax. But for the people who it does function like a tax for, I'd be worried about labour supply, about incentives over hours worked. For very highly educated men, the evidence suggests that hours worked basically don't move. What they do is they start taking income in different formats. That's lower tax. So you might worry about that from a revenue perspective, but it's less
so income in different formats. So what?
Running their business as a kind of owner business, so they take out
Dividends.
Take out dividends instead of
don't pay much income tax.
Instead of paying income tax on it, or they start putting more in the pension because that gets it out of student loan. I guess if you really care about high marginal tax rates because of the combination of student loans and student loan repayments and marginal taxes, you could make student loan repayments tax deductible. So you could have income tax taken from net of student loan income. That would in some sense be fairer. If we think that income taxes should attach to people's living standards, then if we have two people earning the same, one is repaying a loan and one isn't, the person repaying the loan has a lower standard of living, so it's in some sense unfair to make them pay the same income tax in that year. That would be a hugely expensive change. It wouldn't be expensive for DFE, it wouldn't affect loan repayments, it would be expensive for the Treasury.
And challenging for HMRC, I think, as well, with Vivienne Stern.
I just want to, in a way, remind people that this is also an investment for the individual, right? So you're not guaranteed higher earnings, but for the majority of graduates, you will earn more as a graduate than you would as a non-graduate. So by age 31, graduates are on average earning 37% more than non-graduates.
And you said that is now. I mean, there's a lot of concern that won't be for the future.
Yeah, and I can ask our colleagues to send the committee our analysis of the Leo data, which allows you to sort of track earnings over time. And there is, despite the stabilisation of the graduate premium, which is really fundamentally a function of increasing wages at the lower end, so the minimum wage and increasing the minimum wage over time has compressed the gap between graduates and non-graduates. But despite that, the lifetime earning premium for an average man is, I think, about £270,000, and it's about, I may have got those figures slightly wrong, and I can write to the committee to commit them, but it's a little bit less for women. The reason for mentioning this is that what we're doing when we provide graduates with the financial support to go to university free at the point of entry is helping them invest in themselves. We're also making an investment, a national investment, because the Treasury makes a profit on the average graduate. You know, once taxes, higher taxes and national insurance contributions are taken into account, the Treasury makes a return, and the IFS has shown this. So whilst you can think of it as a tax, it's also possible to think of it as an investment. In the same way that a mortgage, you know, if you put that on your tax bill, you'd find, you know, the rate would be a bit of a shock, but you're going to see a return on that investment in most cases.
Mr. Whelton, do you have any perspectives on this from a sort of intergenerational fairness?
Yeah, so I think marginal tax rates are really important in terms of work incentives, but also effective tax rates shouldn't be overlooked. So we did some modelling for average graduates, and for the last cohort of Plan 1, in the first 25 years after graduation, they had an effective tax rate of 18%. For the last cohort of Plan 2, they will have an effective tax rate of 22%. For Plan 5, it's 23%. And that may not seem like a lot, but if that increase in effective tax rate was not delivered through frozen income tax thresholds and frozen repayment thresholds, it'd be equivalent to a 10% increase in the basic rate. So the pernicious effects of fiscal drags are kind of disguising the kind of further burden, which aren't just captured by the marginal tax rate.
I'd just like to echo that the freezes in income tax thresholds, there'll have been a 10-year freeze by 2031 in some of those thresholds, and that's dragging more, if you're really worried about marginal tax rates, that's dragging more people into higher tax bands. Already we've seen the share of the population who are higher rate taxpayers double since 2020.
Thank you very much, Ms. Yang, MP.
Just to go back to this theme of intergenerational fairness, I think my concern is that a lot of the levers that the government now and previously has been pulling, whether it's changing the interest rate or the threshold for repayment, is really a conversation about cross-subsidy within the current cohort or the previous cohort of graduate students. But the bigger picture that I think Sir Philip was trying to get us to look at is the balanced contribution between the state and the individual overall. And it seems, as somebody who went to university in 2008, that the deal has gotten worse and worse for progressive cohorts of graduates, and so that's the intergenerational frame. Mr. Whelton, do you think that we get too caught up in talking about the subsidy between cohorts, within cohorts, and that we're losing the big picture in terms of the worsening fairness for successive generations?
100%, I'd completely echo what Sir Philip has said. We should decide how much the state should subsidise higher education. We believe it's in the generations have a duty to kind of give opportunities and resources, pass on the same amount of resources and opportunities than they themselves experienced. And so if past generations had the higher education partly subsidised, we believe it unfair they push that cost onto future generations, and that is allocated by the subsidy of higher education. So how that subsidy is delivered, whether it's through a cut in interest rate, the repayment rate or the repayment threshold, is a secondary issue. I completely agree that ultimately any solution must contain an increased subsidy of higher education.
Anyone else like to? Philip?
You characterise me correctly. I endorse what Toby said. I think if one important point, you're focusing as a committee on a really, really important issue. I think getting this rebadged as a student contribution system is vital. We must make sure, though, that in focusing on the egregious nature of some aspects of student loans, we don't detract from the overall benefits of a vibrant HE sector for UK economy and for individuals who go there. It's a very balanced and nuanced sort of debate we're having. Thank you.
Thank you very much. John Grady, MP.
Thank you very much, Dame Meg. Now, Sir Philip, the committee's heard a lot of evidence that the terms and conditions of the loan were not made clear to the students. Students didn't understand them. Talks to students didn't explain that payments ratchet up as pay goes up. An FAQ document we've seen says the student loan is not likely to affect a person's ability to get a mortgage, which is completely wrong. And it's not explained to students that the repayment thresholds could be changed unilaterally. Now, Sir Philip, you write very eloquently in the FT from time to time about the importance of banks providing good products to people and not burying nasty surprises in the small print. If a bank sold a financial product in this way, would you expect the FCA to be all over them?
I'm thinking immediately of the car loan scheme or the payment protection insurance scandal, which produced exactly the outcome you described, Mr. Brady, yes.
And a student loan will be, more often not, one of the first big financial decisions that a young person makes. And in its lifetime, his or her lifetime, it will be one of the biggest financial decisions that they make. The loans are exempt from the Consumer Credit Act and Financial Services regulation, so they don't benefit from any kind of consumer protection regulation. Just a quick answer from each of you, starting with Mr. Whelton. Do you think that's fair and reasonable?
I think that while it will never be, I think to aspire for it to be a rational decision of a student, they will never be able to calculate the cost of university because it's so contingent and always changing. Therefore, I think while it's important to have as much transparency as possible, it's ultimately an exercise of government not kind of exploiting the system to raise revenue in subsequent years.
Thank you. Ms. Ogden?
I agree these are complicated and important financial decisions that we're asking often 17-year-olds to make, and so the quality of the advice and guidance they get is crucial to whether this is a fair decision to ask them to make, given the consequences it might have for their future.
Sir Philip?
If there isn't a legal responsibility, there's a moral responsibility not to alter the terms and conditions as we go along.
I think that we've all agreed that we need transparency and scrutiny, and we need a commitment to people who take out loans, what will change and what won't change. I'm not personally persuaded that the Financial Conduct Authority is the right body to provide that scrutiny, because it isn't a commercial loan. I mean, we've talked about this as a kind of partnership between the state and the individual, and it has a kind of statutory footing which reflects that. So scrutiny, transparency and fairness in terms, yes. Should it be regulated in the way that commercial financial products are? I'm not sure the answer to that is quite so clear.
You could change the law. You could change.
You could.
Coming back on the statutory responsibility, now quite a few years ago, in my previous life, I spent a lot of work advising on the contract for difference regime, which is the mechanism to incentivise renewable generators to build big offshore wind farms. And one of the key things from industry was that this must be a contract, because a contract is bomb-proof and can only be changed by consent of both parties. So the generator would know exactly what it would be paid throughout the course of a contract. They didn't want it to be statutory, because statutes can be changed overnight. So imagine a female engineering graduate from Imperial College working on a wind farm, one of these projects. The company she works for is totally protected against retrospective changes and has got lawyers and so on helping them. The individual female graduate, say 22, 23, has no protections whatsoever. How can that be reasonable, Ms. Stern?
Can I just offer you one example of a change that has been made, which is probably in the interests of graduates? So the government's currently worried that interest rates will spike because of the closure of the Strait of Hormuz. And so they acted a couple of months ago to cap the interest on Plan 2 repayments at 6%. For the next financial year, in order to provide, in a sense, temporary short-term protection against a potential spike that was out of everybody's hands. So I'm not giving a kind of straight yes or no answer, which might be frustrating, but I just think that you need to look in the round at how you can provide the transparency and fairness you're seeking in a way that doesn't actually leave government without the room to, intervene when
it's just a little bit frustrating, because the difference is this. If the government offered a positive change to the students, they'd accept it. It's the protection against the negative changes that is a concern. But I'll draw it to a close.
And I think that, and there are examples, for example, when banks were nationalised, there were caps on how far high, caps and floors and ceilings in place to try and put that protection in place. I just wanted to, on one of the things that was apparent in all of the paperwork we've been released from the DFE about the FAQs, the frequently asked questions, and the graphs about how these would be played. These were aimed at 18-year-olds, but do you think there's some support that should be given to parents and maybe teachers who are, or those who are advising those 18-year-olds? Because I think that if you were you have to have quite a lot of understanding of it to have dug through to find the relevant information, and even then it wasn't always accurate. So Philip, you looked at this obviously.
Absolutely so. Completely agree with that. Big responsibility on careers advice and guidance, not just in terms of explaining how the loans operate, but also in explaining the range of options for young people in higher and further education. Now, from next January onwards, the options to do modular degrees under the lifetime learning loan entitlement. It's one of the most important phases of a young person's education this final year, and a lot of the best advice will come outside of the classroom. It's not just parents; it's schools and colleges as well.
And of course, I think we talk about 18-year-olds, but actually a lot of these were 17 in sixth form. But if they're thinking about university or going on to do A levels, they're making decisions at 15 or 16 quite often. So it's okay. So there's a lot more to be done there. Ms. Stern, did you want to add anything?
Just to say, I think I'm not an expert in this, but I think that the support for information, advice, and guidance in schools and colleges has the funding for that has been reduced, and that's clearly a mistake. If you want people to be able to make well-informed decisions, then the schools and colleges have really got to be one of the principal routes for accessing that. But going back to an answer to an earlier question, I think you could produce the best communications materials in the world. If you've got a complicated system, it's still going to be hard to get that across in a way that's understood. And I think that's the problem we've got right now, that I still think Martin Lewis is talking about the kind of right sort of thing, though I agree with Kate, you can't just somehow re-skin this system and describe it as something different, because it won't be credible. But fundamentally over time we need to re-establish how we describe this system, so that it's understood to be a contribution and it's understood to be dependent on your income and not on the overall level of your outstanding loan.
I think if Martin Lewis was paid by mentions in the Treasury Select Committee, he'd be doing pretty well by now.
Yeah.
So, but
I'm not on commission.
But one of the other challenges, of course, is that you talk about the money, but actually it is still quite complicated. But we did find from the 52,000 people who responded, a quarter said they'd do it again. Yes. But actually, most people, it's Hobson's choice. If you want to go to university, most people have to have a loan. So even reading the small print, they didn't really have an option when they looked at it. So I think that perhaps goes back to the moral responsibility and duty of care that Sir Philip's talked about. Mr. Jim Dixon MP.
Yeah, just a couple of quick issues to cover at the end. Sir Philip, you made the suggestion, and it does seem to be one that's met with a reasonable degree of agreement, that we should be looking to perhaps rebadge the system as a student contribution arrangement rather than a loan arrangement involving debt and all the psychology that goes with that. Did you ever get a response from government as to why that didn't get picked up and that wasn't looked on favourably?
No.
So it might be something that, having not with the previous government had a positive take up, we might be something we're looking to take back in our report potentially.
We had interesting informal discussions, but no, as far as I recall, no formal commitment to do or not to do that proposal.
Separate question. If I could just ask, just looking at the international comparisons, it was said earlier that obviously the state makes probably the smallest contribution of any G7 country and similar countries across Europe and elsewhere. Is that because they are sending fewer young people to university, or because they are seeing the state element as an investment which provides a long-term payback for their economies? And is there a different way of looking at this that we should be in the UK thinking through?
Generally, we're in a kind of a pack of advanced economies that have expanded participation to at or around 50%. There are, I think, 6 or 7 advanced economies that are ahead of us in terms of the proportion of the population educated to higher levels. That's because advanced economies tend to be, their labour markets drift to higher skills. And if we want to be in that competitive race, we've got to be in that field. But there's obviously a different view being taken in some countries about the kind of the appropriate balance between the public contribution and the private contribution.
I would add maybe it's hard for us to work out in this room what subsidy we think we give to our students. So how on earth you can do consistent international comparisons of this? I think it's very, very difficult to do.
Do we think that's a useful bit of work, though, actually, to look at the cost benefits of state investment for the economy and obviously for individuals as well, in order for us to think through, as a country, not necessarily for this inquiry, whether a greater state contribution is actually worth it in the end?
My own view is that we should be making a greater state contribution for all sorts of reasons, not least to give the government stronger levers to influence what happens in the higher education system. I think the one thing I'd like to kind of point out is that if you look across systems, it's quite difficult to compare levels of investment because what you're actually expected to deliver is different. Rightly or wrongly, we've got a university system which is quite expensive, and it's quite expensive because we expect quite a lot of it. And that explains why we've got the highest completion rate in the OECD. Other countries tolerate levels of completion of degrees that we would find horrifying. We expect students to get a degree of kind of wraparound care when they're at university that other other systems would find baffling. For example, support around mental health, the way that universities provide real practical support to enable people who've come from a kind of weaker educational background to catch up and to, university is the one place where students from relatively lower income backgrounds can equalise their prospects with peers from more affluent backgrounds. But that's because universities put a huge amount of effort into personalised support, and it costs money. Very low staff-student ratios by international comparison. Do we want that? Well, it probably is a subject for political and public debate now. But we have a system which is one of the best in the world, and it costs to teach like we teach.
Thank you.
Thank you. It's helpful. Thank you
very much, Mr. Stevens. I thank our panel very much indeed for their time. That's Toby Whelton, Kate Ogden, Sir Philip Augar and Vivienne Stern. We're going to now adjourn for our second panel, and you're very welcome to stay to listen to that. So order. Order. Welcome back to the Treasury Select Committee on Tuesday, the 2nd of June 2026. We're continuing our discussion about student finance, particularly the student loan system. And this second panel is students and graduates, reflecting the people who are in the middle of the system. So we're keen to hear from them. And from my left to right, we have Alex Stanley, who's the Vice President for Higher Education at the National Union for Students. And Alex, you were a student or are a student still at Exeter. How's it work? You're on sabbatical.
I was a student between 2020 and 2023 and then moved on to this full-time job. Yeah.
Okay, thanks very much. Kieren Walters is the Director of Communications and Research at Prospect, the union. I won't ask you when you were at university, Kieren. And Oliver Gardner, who's the founder of Rethink, Repayment, so which has been very instrumental in the discussions that have been very, very vibrant and heightened over recent months. So I want to come to you, if I may, Alex Stanley, from the NUS perspective. Thank you for your written submission, by the way, and that argues that the high interest rates that are applied particularly to Plan 2 are causing students to have that lifelong debt. And as I said in the previous panel, that we got very loud and clear from the 52,000 submissions, that felt like a very big psychological burden. But you also argue in that statement that all students should pay back for 30 years to make the system more fair. So that's effectively arguing against early repayment. So I just wanted to be clear, is the NUS in favour of lifelong repayments or of low interest rates to try and reduce the lifelong burden?
First of all, thank you very much for having me. I think our biggest concern in all of this conversation is around those thresholds. Time and time again, we've heard from hundreds of students that the fact that the thresholds were frozen has put a real serious challenge on young people. This is a generation of graduates who are struggling to talk about pensions or their mortgages or starting a family, let alone paying their rent and bills. And a lot of that is coming from the fact that that breathing space just doesn't exist anymore. And I do think that that was one of the things that is advertised. So absolutely, as this session continues.
The breathing space meaning when from graduation to when you start.
From graduation to the point of threshold, absolutely. And so I'm absolutely happy to touch on some of the other issues as this session continues. But the priority for us in the sort of immediate term is those thresholds.
Okay. So, but that on its own will just gives a breathing space. The high interest rates, though, have been one of the things that really came out loud and clear in the submissions. That people felt that they're just never going to, the capital's just going up from the minute they start studying, in fact. So do you think it's reasonable that it is going up? We had some interesting evidence from Kate Ogden on that people are paying, the interest is being applied to their loan even when they're not earning as undergraduates. What's your view on that?
I think it's a real challenging psychological situation that it puts students and then graduates in, and it's not just that you're earning, it's not just that you're seeing it rise when you're a student. There's other instances when you're not necessarily earning, but you're seeing it go up for instance parental leave, and so there's a number of issues with this system that we've tried to highlight as much as is possible. And one of the things that I would be really concerned about is I'm really proud of higher education as a sector that's a fantastic tool for social mobility, and if for 1 second I start feeling like some of these concerns around interest rates, around spiralling debt will put off working class young people from going to university, then absolutely that's something that we're going to be raising.
Okay, so what's your view though about whether there should be any interest charge when people are undergraduates, or indeed, as you highlighted, other periods of not working, but particularly before they actually start getting the benefits of their degree? Because Kate Ogden was saying, and I think a fair point she made there, that if you gave people an interest-free period, people could just take the money, put it in a high interest account and make money off taxpayers' loan, basically. So have you got any views on that as at the NUS?
Well, I don't necessarily think it's fair that people are seeing it go up as they're studying, and namely I would highlight the sort of psychological burden that puts on you. I mean, I graduated just 3 years ago and I borrowed £50,000. I'm already in a situation where I've got £63,000 of debt, and that is a story that so many young people across the country will be able to tell.
Okay, Mr. Gardner.
I would just say that with Plan 2 loans, when you're at university, you were charged the maximum interest rate. So I think thinking about what Kate said, and I think we would agree as a campaign that actually a 0% interest rate is not really feasible, because that means the real value of your loan will fall. I think charging an above inflation interest rate whilst people are at university is absolutely outrageous. And actually, I know this isn't really a focus of today's inquiry, but the postgraduate loans also face an RPI plus 3% interest rate regardless of income, and actually a repayment threshold of £21,000, which in and of itself is outrageous. I suppose I would just...
£21,000 considerably below the minimum wage.
Oh, yeah, on full-time equivalent minimum wage would be far above that. On the mandating a 30-year payoff period, I think you would have to be very careful, because what you couldn't do is allow some people to have their parents pay their tuition fees up front, who then effectively opt out of paying any interest on the loan, and then forcing people that have no option but to take out a student loan to stay in that 30-year period. I think that wouldn't be feasible.
Yeah, certainly that was some of the discussions in the early 2010s about whether people should be allowed to pay it off early. So your view is that people shouldn't be allowed to pay it off early?
No, I think they should. I think if people have the option for their parents to pay it and therefore escape all of the interest whatsoever, I don't see why people shouldn't be able to pay it off early.
Oh, sorry. So you're saying that? So you're saying because some people could be their parents. I mean, they never take out a loan in the first place. So that anyone else who can.
I don't think that just by virtue of having to have taken out a student loan, you should be forced to repay it over the full 30 years if you're going to allow people to pay fees up front.
Okay.
Does that make sense?
Yes, I hear what you say. And then just I wanted to pick up on the 40-year versus 30-year write-off date. First of all, Mr. Gardner, have you got any views on that? And I'll come to Mr. Whelton.
I mean,
this is again just going back because it's a different panel. Under Plan 2, the write-off date is 30 years after graduation. Under Plan 5, it's 40 years after graduation. I wonder if you had any thoughts on that.
I mean, I think the prospect of paying it back in your 60s doesn't feel great to me. I think just interesting listening to your pensions conversation earlier. The OBR have estimated that there will be a tripling in the number of pensioners living in private rental accommodation by 2040. And I think what we're really at risk of creating is a generation who aren't able to buy houses and accumulate the wealth that their parents did. They're not able to save into their pensions. They're making these student loan repayments, and then effectively they're getting to retirement age, and the burden on the state is going to be substantial. And I think that the previous panel were very measured, but I would like to impress on you as a committee that I really do see this as an intergenerational crisis.
In fact, indeed, we've seen in a previous role I had, we looked at pension contributions, and we saw a trend of people not even paying into their National Health Service pensions because of the costs of rent and pressures on this generation now.
And obviously in your 52,000 people survey, there was a statistic there that 70% of people think that their student loan repayments will materially impact their financial situation. We decided to drill down into that a bit further, and we surveyed about 1,300 people. 90% of them said that their student loan repayments are delaying or preventing their ability to buy a house. 85% have said it's delaying or preventing them from starting a family. 91.5% said that it means that they're not able to save as much for retirement as they'd like. And 73.3% said that they've considered moving abroad due to the financial reasons.
Just out of interest, was that survey a weighted survey, or was it?
No, it was done with our supporters, but I think it gives you the strength of feeling of young people.
I mean, indeed, ours, just to be clear, our 52,000 responses were not weighted. This was those who chose to write in. We didn't weight ours either, so it's just useful.
Yeah.
Mr. Walters, I mean, you're dealing with an older cohort.
I suppose.
What about the 40-year threshold?
I suppose we can generally speak to those people who are in this Plan 2 category, who are now quite established in the world of work. And I think, just to be clear, some of those, the first people in that Plan 2 group are hitting their early 30s, and that's the group we're talking about. I think we'll hopefully come on to talk about some of the marginal tax issues and other things. I think, the point that was made in the previous panel about looking more broadly at the balance between taxpayer contribution and student contribution is right. However, maybe depart slightly from the other panellists here and say, I think for our members, if you were to look at short-term priorities where you would potentially spend some more Treasury money, it would be reversing the decision made in 2025 to freeze the thresholds, and that would put money back in the pockets of graduates that would help with the cost of living squeeze that they see. So yes, there is a psychological burden of growing loans and other things. I think that's undeniable, but in a world of limited resources and prioritisation, I think the priority does need to be on the things that, in the short term, put money in the pockets of graduates.
I think I've got a fair consensus about the thresholds. I think Mr. Gardner maybe wasn't explicit. So just, Mr. Stanley, you made it very clear about the thresholds. You have Mr. Walters, just Mr. Gardner. Is that would that be a high priority?
Yeah, definitely.
Yeah, okay. And just to be clear, when you have higher interest rates above, if you had a cut in interest rates, and the winners were higher earners because they weren't having to pay quite so much, would that be? Do you think that's fair, Mr. Gardner?
Yes. I think that the people who are going to end up paying most back are teachers who go into middle management and senior management positions, or doctors. I mean, it's not the investment bankers and the corporate lawyers that are the ones that are most affected by the above inflation interest. Just an example, there's a 33-year-old NHS doctor about to be a consultant. So far, they've had £38,000 of interest added to their student loan, and they're expecting to repay about 2 to 2.5 times the amount they initially borrowed. And this is an NHS doctor. I think we really need to think about how we're incentivising people to do jobs like that.
Okay, Mr. Walters, any thoughts?
I think I agree with that point, but I would just say if the thresholds would be, I think, the top priority. Next for our members would be something around the repayment rate. I think interest rates is a bit further down the list in terms of if you had money to spend in this area, what you would target.
Okay, Mr. Stanley, anything to add?
I mean, they're all incredibly important to us. I do think that the thresholds are, in the sort of immediate term, an absolute priority for us. And then I think probably the repayment rates follow, but absolutely acknowledge some of the real issues around those interest rates. And I think it's around £47,000 as a yearly salary that's considered the sort of danger zone. And you'll find a lot of sort of young professionals in that space and being hit quite hard. So absolutely, I do share the concerns around the interest rates.
And of course, a bit higher than that, and they're paying high rate tax on top as well. So thank you. Thank you very much indeed. John Glenn, MP.
Yes, I want to address the issue of changing terms and conditions. So the 1998 Higher Education Act essentially gives freedom for any future government to change the terms and conditions of the loans. I'd like to ask Mr. Stanley what he thinks about that and what students feel about that in terms of the changes that have happened, and sometimes within the period of deciding to go to university and graduating.
Absolutely. I mean, I think I understand that legally this may not have been a mis-selling of loans, but if that is the bar for this conversation, then I think we're really letting young people down in this discourse. I mean, when Plan 2 loans were introduced, I think there was a clear consensus in messaging that you wouldn't really need to worry too much about the sort of the debt that you accrue. You wouldn't be looking over your shoulder too much, but that just isn't the reality that young people are facing at the moment. The average graduate debt is £53,000, and that is pretty harrowing for young people who are trying to move into the job market, trying to sort of find some stability within their lives. And so absolutely, I think that is a real issue of acting in good or bad faith, and that's something that we need to deal with as we start to move forward. There have been 2 occasions where the thresholds have been frozen, and that has a real-time impact on graduates.
What do you think about students' understanding of the terms and conditions and the changes to them? Do you do surveys of students at different stages in their journey through this process, and do you have any evidence around what they think about what's happened?
Well, I'm sure that after this session I can provide some more detailed information on the specifics. I'd be very, very happy to do that. But what I would say is that I think because of the kind of discourse that we started off with on Plan 2 loans, that this wasn't really something that you were going to need to worry about. You can keep calm on all of this. There wasn't necessarily the feeling that we needed to analyse every single piece of information in the contract. But as we've seen this discourse start to increase, people have started looking at their loans. They've started to see just how unfair this system is, and that's why I think we've seen the concerns start to rise. And I think the fact that people weren't necessarily analysing every single part of their loan is a result of the fact that there weren't necessarily good faith actors at all moments in this process.
Thank you. Mr. Gardner.
We did a survey alongside the campaigning organisation Organise of around just over 3,000 people, and 82% of respondents said that they didn't feel fully educated on their loan terms before signing. I think also you could have been fully educated about the loan terms, and you could have completely understood that the repayment threshold was going to rise each year with average earnings, and yet you still wouldn't have been able to make a fully informed decision because the threshold has been frozen. And I think when you may have seen the BBC reporting about how the people who were sent to schools to sell these Plan 2 loans were told to compare monthly repayments to a phone contract each month. Yeah. They were actually encouraged not to use the word debt unless they were asked about it. And I think that, that is really troubling, particularly when graduates are already facing, or young people are already facing, a really challenging financial outlook with housing affordability and pensions. For example, real wages for graduates have declined by about 30% since 2007. To then see Rachel Reeves or previous governments freezing the threshold makes it feel a lot like we're being used as cash cows. And I don't want to make this a battle between generations, but by 2030, the triple lock is going to cost the government £15 billion a year to maintain, just having the mechanism of the triple lock. So to see graduates being the mechanism to generate more tax revenue effectively from a loan system, I think lots of people feel very, very angry about that.
Thank you. Walters, do you want to say anything about
this?
this?
Just to build on those comments, I think graduates are, it has eroded their trust in government, that there's been a constant chopping and changing of the terms retrospectively, and that is problematic. I suppose that then brings you to the question of what you do about that, and I think we'd argue for, firstly, a commitment on all sides to more policy stability going forwards, and to think about how you make decisions about this in a more open way. It's been touched on. There is very little information about options and trade-offs published by the Treasury, so it's quite hard for people to understand externally what's going on a lot of the time. But also, it's not a conversation between those people who represent graduates, students and others, and government and other parties to try and get a stable, sustainable system over time. but it's just action around, individual budget, small changes around individual budgets, which then over time add up to these quite big changes overall.
Can I just ask one other question on this subject? When you look at the different plans and you look at the different changes to thresholds and rates, etc., given all governments have got finite resources, where would you recommend this committee look at in terms of the worst changes in terms and conditions to which plans? Where do you feel across all of the graduate population the worst impacts have been felt?
I think for our members it's those that group in the Plan 2 category that have been hit by the retrospective freezing of the thresholds, and I think that is absolutely at the top of and forefront of their minds.
Thank you. You agree with that, I assume, Mr. Stanley, Mr. Gardner?
I would agree that the thresholds are an absolute priority, as well as the repayment rates, and I do think that.
Or Plan 2.
I think that Plan 2 should be a priority. One because there are nearly around 5 million people who took out a Plan 2, but secondly, I think to reinstall trust in the sector. A lot of this discourse has primarily focused around Plan 2, and a lot of prospective students and their parents will be looking at this conversation and going, something really needs to change if I'm going to have the confidence that my child should go to university. Yeah. And so I think if we fix some of the foundations of Plan 2, hopefully we can start to rebuild some of that trust.
Mr. Gardner.
I would say that our campaign has predominantly focused on Plan 2, and that's not because we necessarily think that Plan 5 is much better, but I think that there are a lot more people who are earning enough for Plan 2 to be having a really significant impact on their ability to buy houses and have children, things like that. So I think that's why it needs to be the immediate focus, but I would definitely think that Plan 5 might need to be looked at further on down the line.
I want to move on to the...
Just before
sorry.
Okay. Yes, Mr. Clare.
It's okay. Okay, I want to move on to the way that we fund universities overall. And it's really important that we act responsibly on this committee. We can't, recommend spending more on everything without recognising there are consequences. But I want you to, if you can, address where the UK sits compared to other comparator economies in terms of the amount of money we spend and the size of the sector, and what you think about what the government should do to ensure that we retain competitiveness as an economy in terms of graduates and encouraging the right numbers and so on. What have we got right and what do you think we've got wrong?
Yeah,
Mr. Gardner.
I mean, I can't give you exact figures on the international comparisons. One thing I would back up from the previous panel is that we've had lots of economists look at this, and it's very difficult to cost policy changes because a lot of the data is sort of held by the Treasury and not shared publicly. Yeah. I think that one thing that we need to be really careful of is having this zero-sum discussion about graduates and non-graduates. I think that you can absolutely make the case of lowering the repayment burden on student loans for graduates whilst also investing in really high-quality apprenticeships for non-graduates. And actually, you see Alan Milburn's report last week, but it's now more competitive to get into the top apprenticeships in Oxford and Cambridge. There have been a 35% decrease in the number of people starting apprenticeships in the last decade. I think that is a huge issue in and of itself, but I don't think we should be pitting graduates and non-graduates against each other.
No, I'm not asking for a sort of simple gotcha thing. What I get at is, in a situation where over the last 20 years we've seen vastly higher numbers of people, or 25 years, go to university, and we've seen therefore the provision that the state has to make for it increase. How do you feel about the way that, you heard probably in the earlier session how that money is distributed? Do you have a view about, where government should be spending more or less in terms of the sector?
I don't have a specific view on that.
That's fine. Mr. Whelton?
Yeah, so we represent members across what you would hope are broadly growth areas. STEM and the creative industries are very strong areas. I think whether or not someone goes to university in those areas, they're expensive areas to train people, expensive degrees to deliver, but also good quality vocational training is expensive to deliver. I think there is broad consensus that we need to grow all of those areas. So I think you can see that over time, regardless of that balance, some of those costs are going to increase, and also in the vocational area, employers' contributions to training has fallen over time. I would also observe, as a union that represents a lot of people in regulated industries, that if you, for example, move the cost of training lots of people in the electricity sector onto employers, then that feeds back through the electricity bills people pay. So, most people are paying those, so it's kind of, we've seen that some policy costs are better on general taxation. So I think there's no straightforward and simple link between the cost of universities and the overall cost to taxpayers of the kind of training and education you want to deliver over time.
Can I just put to you what we had Philip Augar obviously here earlier, and in his review he concluded that, and I quote, generous and undirected funding has led to an oversupply of some courses at great cost to the taxpayer and a corresponding undersupply of graduates in strategically important sectors. How do you respond to that there are some unproductive degrees, and in order to satisfy the needs of a changing economy there needs to be some reset?
Yeah, so I'm going to give you a nuanced answer to that question.
Most usually do.
Yeah. I think the first part is, undeniably in the current system the government doesn't have many levers to direct the funding it does provide, either through grants or student loans, into particular priorities, whether that's from industrial strategy or growth priorities more broadly. I don't think you can argue against that. However, I think it's also true that it's quite hard to exactly work out where different types of degrees are going to feed into growth. And I'll give you two examples. Firstly, the creative industries is one of the government's industrial strategy priorities. Film and TV, where we represent a lot of members, has been a huge growth area for the UK. Some of the degrees in the arts and creative sector might be considered on paper to be unproductive, but they're going to feed into film and TV and be hugely productive in terms of their payoff for the exchequer. I think the second area is there is clearly huge change happening to the labour market, not least because of AI. You might have said that coding skills or legal skills were really going to be huge payoff areas. Now they're areas that are massively exposed to AI, and that's not as clear as it might have been otherwise. So I think it's quite hard to see that.
All of that is true, but as Vivienne Stern said in her evidence, you've got vast differences in the cost of providing these, and I'm afraid a finite budget. How do you reconcile that then? I mean, you seem to be reluctant to, I understand you don't want to identify a specific course at a specific institution, but do you think that there is only one way that this can work out, and that's spending more money in this sector? Or is there anything you can say about the distribution at the moment where we could reset things in order to remove that cross-subsidy that Vivienne Stern was referring to?
I think the government should have more levers to be able to direct more clearly the skills system broadly, and that includes universities, towards its priorities in terms of industrial strategy and growth. However, it's got to be a bit careful, I think, in the way that it does that, but it should try and steer the system more than it does, and ultimately that's going to require increasing the supply of some more expensive degrees in STEM areas.
Not the decrease of others.
I think overall you're going to see more people over time wanting to pursue those STEM and creative-based careers, because clearly that is the way the economy is changing over time, and clearly also there's a part of this which is also, yes, it's about day-to-day spending, but also about capital spending. A lot of those STEM areas would require more labs, more science facilities. All of those things are expensive to provide, so it's not all about revenue funding.
I think for instance, the need for more medical school places and the time it's taken to do that. I think one of the things is interesting here, though, isn't it, that governments aren't always good predictors of future workforces. So
I think we did hear in the previous session, though, other countries provide a very different offer as a university. I mean, I think in France you see more people going to university near where they live, so it removes the living costs. the degree of wraparound care and welfare is different. Would that not be an area where you could find ways of resetting the expectations, if you like, of the social contract between the university provider and the student in order to focus more money on some of those interventions that would actually, the core costs of providing would be supported more?
So I suppose it's hard for us as a UK union to speak to international comparisons.
You get the concept.
I would. The one slight note of caution on that is clearly the way the UK system is currently structured means there are some centres of excellence around the country, and often we represent people with very specific and specialist skills where there might be only one or two or three places that kind of provide that kind of training currently. So you would have to broaden, I think, some of the provision of training across the country if you were to go down that route.
Thank you, Mr. Walters. Mr. Stanley, is there anything you'd like to add on this area of the overall cost of university and how it's distributed?
I think what I'd like to touch on is the kind of culture that is created by the current balance of public and private investment that we have. I mean, I think we'd all like to see university and the sector treated as a public good, but because of the financial pressures that are put on this continuous cycle of universities having to be laser focused on recruitment, laser focused on getting international students and postgraduate students through the door, means that is in many ways the focus. And I don't think that's where the conversation should be at the moment. I mean, I think so often students are getting left behind in this discourse. I mean, some of the statistics that I've seen in recent years are pretty harrowing. I mean, 27% of universities are now in a place where they're considering cutting bursaries and scholarships. 13% are cutting hardship funding, and that's because universities are being put in these really, really challenging positions. And I think you'd see some of those pressures alleviated with further public investment. And I acknowledge that this is a difficult financial situation we find ourselves in. But what you've got currently is a kind of two-tier student experience that's being created by this financial predicament, where some of our more well-off students are still able to enjoy the full fruits of their university experience. They have the privilege of unpaid internships, of clubs and societies, of work experience, of being able to do everything they can to make themselves the ideal graduate to go into that perfect job, while the sort of the rest of the sort of student body are in a really difficult position where they're working long hours in a part-time job. 23.9% of my members are working 30 hours a week alongside full-time study. That is no way to be able to fully enjoy the student experience and work towards being the sort of ideal graduate that you want to be to move on into the job market. So I think that is the kind of intervention that we need to see if we're genuinely going to make sure.
Spend more money, essentially.
I think creating the climate where universities are able to invest in a way that all students have the opportunity to be the best graduate that they possibly can be, because what we have at the moment is a situation where, yes, I absolutely acknowledge that the dropout rate is not in the worst place in the world, but that a lot of students are just about clinging on, and they're clinging on because they know that this is a real opportunity for them and that university is for them that tool for social mobility. But right now, we're letting them down. We're letting them down because there isn't necessarily that safety net for them.
Sorry, my last question, what I'm trying to get at is, realistically, given where we are in terms of the public finances, the notion there's going to be a significant or even a meaningful uplift in the budget that is given to this is I think, would be very optimistic. So what I'm trying to get at is, if you broadly say that the numbers are about the same or go up with inflation, how can you spend that cake differently so to be more effective for the cohorts of students that are going through and for the graduates that have got to repay this? Because I think what I'm hearing is all of you saying, we need to put more money into this. And I think, candidly, no Chancellor, Labour or Conservative, is likely to be able to do that. So we're having quite an academic conversation, which I'm not sure is how useful it is to those watching.
Mr. Stanley, anything to add?
Well, perhaps I have more optimism. I think the strength of feeling has been highlighted by this discourse, and we're already seeing the government making interventions that I don't think they would have dreamed of months ago. I mean, previously we had the Chancellor describing the current system as fair and reasonable, and now we're in the place where we absolutely welcome this committee's inquiry, and we've seen policy changes already. So maybe we have a slight difference of opinion there. But one of the things that I would add on top of the the interventions that I would make for graduates. I think something that you could do for students is expand the number of students eligible for the new reintroduced maintenance grants. I think if we want to alleviate some of those pressures in the short term for students without increasing those debt-based burdens for graduates, that would be a real positive step in the right direction.
Thank you, Mr.
Thank you very much. John Grady.
I want to pick up where Mr. Glenn left off actually with a couple of questions. Mr. Walters, I mean, a lot of your members work in engineering, the energy industry and so on, fields of great innovation. I wouldn't have said 30 years ago that we could run, much of the UK on renewable energy for your crackers. Do you think there's been enough innovation in terms of how higher education is delivered? So, for instance, 2-year degrees, more 2-year degrees as opposed to 3 or 4-year degrees and things like that. Do you think just a couple of short remarks on that?
Yeah, I think...
Because that would address Mr. Glenn's question about doing things differently and more efficiently.
It may do, and I think we'd always put an emphasis on some of that industry-linked learning. When we speak to, when we speak with our employers, they, I think, are keen to be able to shape the system more and to be able to make sure that the training that and education that's delivered is really linked to what they need in terms of employees that come in. Having said that, I would caution that it's not always necessarily a cheaper way of doing things, because there are other costs associated with providing those kind of skills, I suppose. Overall.
Thank you. Mr. Stanley, a student going to university and taking out one of these loans is entering into one of the top 3 kind of financial decisions of their life, and you'd want to be well informed. We've talked a lot about the loan side. Let's talk about the university side. Do you think students have access to clear, transparent information about the factors that are relevant, i.e. whether it's a good faculty or bad faculty in terms of teaching, what the earnings are from the course, and whether you're going to have higher or lower earnings? Because as Mr. Gardner mentioned, people want to then buy homes, have families and things like that. Whether in fact they're better off going to a university closer to home, because actually it's better in the round, or as good as in the round, than one at the other end of the country. How the information of, if you like, the purchase side, is that good enough for students deciding to enter into this big commitment?
It could certainly be improved, I think it's fair to say. I think Sir Philip referenced certain websites that could certainly be updated that have a lot of that relevant information. I also think that some of the messaging that then comes through from colleges and sixth forms isn't always necessarily consistent. And I think there definitely is also a sort of cultural conversation to be had around what options are best for different students as well. For many students, further education, apprenticeships will absolutely be the right option for them. And we've often said that in many cases, as much as we want as many people who want to go to university to be able to, we're agnostic as to the actual decision that student makes, so long as it's the right one for them. So for us, this isn't about making sure that necessarily as many people go to university as is possible, but they have the tools available to make the right choice. And right now, I think there are a lot of updates that need to be made.
Underpinning this, much of the cost sits with the student. The underpinning intellectual idea is there's a large amount of student choice. Is that student choice informed in your view, Mr. Stanley?
I think there are a lot of gaps that certainly need to be filled, and a lot of that does come down to the sort of contract that we sign up to. We've seen I think, the state not necessarily acting in the best of faith at times.
What I mean is more actually the choice of course, not the loan, choice of course.
I would say that the choice is made clear to young people. I think some of the expectations when it comes to things like work alongside study aren't necessarily made clear, and some of the struggles that may come alongside a course are actually some of the things that I think we should be highlighting on.
And Mr. Gardner, briefly, do you think students have enough information to make a good choice about the course they take in terms of quality of teaching,
future earnings,
and all those relevant features faced on the other side? They've got this big bill at the end of it.
I think it could be better. You heard Sir Philip Augar talking about the Discover University website. It's quite clunky. I think that there definitely could be more done to educate young people.
Is this a 2 out of 10 situation, an 8 out of 10 situation? I mean, how good is it on a scale of 1 to 10?
How long's a piece of string? I mean, it's very difficult for me to provide judgment on that.
You get that from some of the people that you're the cohort that you're engaging with, because they've gone through this, they've made their decisions, they're in their jobs.
Yeah.
Do you pick up anything about regrets about decisions that they've made because they didn't realise it?
I think, quite frankly, if you ask most people with Plan 2 loans how Plan 2 loans work, I would imagine that the vast majority are not able to explain the specifics to you because it's a very complex system. And I think that maybe even goes to show that there wasn't enough education done. Whether people have enough information to make the exact course choice, I'm not sure.
Okay, thank you. Thank you very much, Mr. Grady. You and Lee.
Thank you, Chair. Moving to distributional effects and the winners or losers question, I take it that the panel is agreed that given the scarce resources and the need to prioritise, your top priority would be tackling the thresholds. Is that generally yes? And that interest rates are kind of lower down the list of priorities because changing the interest rate only really affects the top earning graduates who will ever have a chance of repaying their loan. The issue for this is that from the submissions that we've had, as others have mentioned, what's really psychologically oppressive for most Plan 2 graduates is getting that letter through the post with their ballooning debt. As one person said, called it extremely soul-destroying to even read that. And this means that there's quite a lot of pressure, political pressure from students from graduates on the interest rate issue, whereas actually solving the interest rate issue is not in the interests of the general cohort of graduates. That's the political problem that I see. So I wonder, do you see this as being the issue, and if so, how do we tackle this on a political level? Mr. Walters?
Yeah, so I think I'd draw you back to my earlier comments that there needs to be more of a conversation between the government, the Treasury, those groups who work with graduates and students, including trade unions, to actually work through some of what that looks like. And if you're going to make a change, then get a wide buy-in for how you implement that change, which I think then means that there are people in the conversation who are not just ministers saying this is how it is. If you can get a wider buy-in, then I think you can start to change that conversation and make people think about the broader context of that loan letter.
But do you think the presentation of it can be improved so long as it is a loan on paper and you're going to get a loan balance? I mean, is that the fundamental sticking point there, do you think?
I mean, I think the presentation of anything can probably always be improved, and I think you could use that as an opportunity to, point out the broader contours of the system, and that most graduates don't repay the full amount that you are in that, if you like, experience this as a tax. Yes, you could do that, but I think what would be felt most keenly is if you can put more money in the pockets of graduates, and you've got that to point out to them at the time as well.
I would echo that. I think on a very fundamental level, if people saw more money going into their pockets, it makes the messaging a lot easier, because one of the big issues with this freeze at 6% when it comes to the interest rates is people are still going to see their overall amount continue to balloon, but only by a little bit less. Whereas if we actually were to make changes to the repayment rates, you would see more money going into people's pockets. And I do think if we're talking about messaging, if we're talking about rhetoric, that probably is a bit easier to sell, especially with the backing of sector.
Yeah, thank you. And finally, I've a much broader question about intergenerational fairness, because it came up on the previous panel, and as Mr. Gardner earlier also described it, there's the risk, I think, when we talk about the overall shape of the tax and benefit system, students and young people, I think, understandably feeling like they are, as you've said, Mr. Gardner, the cash cows, or those losing out from the overall structure of this system. I was wondering, Mr. Stanley, as somebody who works with young people and students, do you see this as being the fundamental political structural problem about the fiscal system, and how would you change that on a fundamental level?
I do feel that it is. It's incredibly fundamental, and I do think it speaks to the fact that a lot of people are losing trust in politics, in political parties, and I do think it does speak to that wider issue of intergenerational unfairness. I mean, you look at how this sort of cohort of university students and then graduates have been treated. They had their tuition fees trebled, they had their maintenance grants scrapped, they had maintenance loans not rising in line with inflation, they had their thresholds frozen, they had their repayment rates too high, they had their interest rates too high. It's been a pretty rough deal for this generation of young people, and making changes to some of those things that I've spoken about would be steps in the right direction, because young people are not having those really relevant conversations about their mortgages or about pensions or about starting a family, investing as themselves into the economy. They're instead talking about how we get by.
Gardner.
I teach economics. That's my day job, and I do strongly believe that there's a really clear long-term economic case for lowering the burden of student loan repayments for young people. Oxford Economics, the consultancy, wrote a really good research paper which said that targeting young workers is economically counterproductive as they have higher marginal propensities to consume and are more likely to invest in equities. The knock-on effects are much less dynamic economy with more limited consumer spending, weaker business investment and a greater aversion to risk. Putting more money in the pockets of young people is money that's going to be spent in the UK. And I think we need to have a wider conversation, and maybe this is something that the committee can look into, about what the long-term costs of inaction are here. What are the long-term costs to the UK economy of people not having the same pensions when they retire? What are the long-term costs for the UK economy if the birth rate continues to fall at the rate that it does? What are the long-term costs if people aren't able to accumulate wealth, as much wealth as our parents generated? So I think there's a really, really strong economic case to be made here as well.
Thank you very much. Thank you very much, Ms Yang. Jim Dixon, MP.
Yep, thank you, Dame Meg. A lot of the evidence we received talked about the heavy psychological burden of the amount of debt. You've stated sort of very large figures that people early in their careers are facing, you know, a 50,000 debt going up over 70,000 and beyond. Would you favour looking to just try to change the terminology here? And obviously there are lots of other changes that we can undertake within the system, so I'm not trying to say simply rebrand as a solution to all the issues you put on the table, but do you think there is a case for looking at things differently, not as debt, not as loans?
Is that a reference to graduate tax discussions?
Either graduate tax, or obviously Sir Philip Augar came up with the idea of a graduate contribution system. Would you favour that as a potential element of the sorts of changes that we might recommend? Start with Mr Stanley, perhaps.
I mean, for us, that is very much secondary, to be honest with you. I mean, I have hundreds of conversations with students and graduates, and for me, it is about those changes to the terms. I think whatever you describe it as, a contribution very much insinuates that you're paying something out. A tax very much insinuates and is correct in saying that is money coming out of your pocket. And there may be polling saying that one is preferable than the other, but for me, the absolute fundamentals of policy is where we need to be leaning into.
Yeah, so I think we'd when most graduates experience this, don't pay back the whole of their loans and experience this more as a tax. I think it's self-evident that a word like contribution is a more accurate way of describing it, and as a union of scientists and others, a kind of evidence-led approach is right there. However, I think if you only change the name and then go to graduates and say this problem is sorted, I think they will very rightly see that that's not the case, and you probably end up further eroding trust in the system. That needs to be part of a bigger picture, I think.
Thank you. Mr Gardner.
I think just changing the name is akin to rearranging the deck chairs on the Titanic, to be quite honest with you. I don't think people would... people have known it as a student loan for 11 years already. I don't think you're going to get them to suddenly switch their thinking.
And just finally, the notion of actually moving entirely to a tax-based system rather than the present system we've got, where clearly terms and conditions have changed, new plans have been introduced, new burdens have been introduced. Would it just be simpler to have a tax that graduates pay throughout their time as taxpayers? Mr Stanley.
My concern with that is that there's a lot of confusion already that exists, and there's a lot of explaining that we're already on the journey to doing. And if we move to a new system entirely, we have to start all over again with that. And there is also, of course, the issue that a significant proportion of graduates may then end up paying even more than they do already. So it's not something that I'd necessarily rule out. I think there are conversations that definitely need to be had. But right now, there are 5 million young people who need a few very specific policy changes that need to be made, and that's where we're focusing.
Walters.
I don't think anything to add to the previous witness.
Mr Gardner.
I think that it could be something that's looked at going forwards. I don't think you could change the existing system to a graduate tax. I don't see how someone that's already paid off their full balance and then is forced to pay a graduate tax for the rest of their career would feel about that.
There'll be barricades out.
Definitely agree with you on that. Thank you, Jane.
Thank you very much. You and Yang MP.
Thank you. Just to finish off, I appreciate that you're speaking to a committee of ageing millennials and above, but there but there may be many young people listening to today's committee, which is being live streamed on the BBC Parliament. And I wonder if the panel have any words of advice for those who are going into university or maybe repaying their loans right now, both in terms of how they should think about the contract that they're entering into, but also how to make their voices heard in this debate. Maybe I'll start with Mr. Gardner and move across the panel.
Yeah, I think it's become clearer and clearer that university is costing more and the benefit you derive from university is getting smaller over the last 20 years. So I would strongly consider people to think about it and consider alternative options. I think, if I was in the same position again, I'd really consider a degree level apprenticeship or something like that. But I would definitely not discourage people from going to university, because also what we see is that it tends to be people from lower income backgrounds who are most debt averse, the research shows. So I think we need to be really careful not to end up putting off people from going to university, which could harm social mobility. I think what our campaign has showed is that as a generation, we do really need to stand up for ourselves when it comes to economic issues, because I think older generations do that very well, and they are rewarded with policies like the triple lock, for example, that they vote, and that's why they get those things. If we just sort of lie down and let this wash over us, then we don't really stand a chance, to be honest with you.
Mr. Gardner, I just wanted to pick up there because you said you teach economics. You do that in a school setting?
Yeah, I teach A-level economics.
Right, okay. So if you hadn't gone to university, you wouldn't be able to teach. I mean, there are attempts to have apprenticeships for teachers, but it's not mainstream really yet. So you would not be able to be an economics teacher at the moment if you hadn't gone to university.
That's true, yeah. And
so do you think there's a crisis that if people took that advice, that we might end up with whole professions that just
potentially, yeah, I do think that's the case, and yeah, I think that it's the fact that with I know the interest is very contentious, and I know that lots of people think it's the biggest issue, but we've argued that maybe the threshold freezes and is maybe a larger issue, but it is those middle earning, those public sector workers that are going to be the ones that repay the most. It's not your investment bankers and your lawyers, because they will pay it back really quickly. So I do think we need to really think hard about who these plans do actually, hit worse.
So really perhaps have a tracking of where we're seeing drop-offs, because we don't have to have physics teachers, for example.
Exactly, yeah.
Mr. Walters.
Yeah, so I think broadly to young people, as a union, as STEM and creative people, I would point them to the fact that gaining those skills in a economy that is changing quickly is really important to them, and they may want to do that at university. They may want to do it through a vocational route, but there is but making sure you stay in some kind of education broadly conceived, and gaining of skills is going to be critically important, and people need to do that through their careers. And then on the point about voice, of course, I'd say through a trade union is critical, but look, it is right that these people have a voice in the political debate and make themselves heard and felt, and I think everyone would want to encourage that.
Mr. Stanley.
I'd say the university is still worth it. If you are looking at your options at the moment and it comes out as number one, go to university. It is absolutely an investment. I understand there are financial challenges that come alongside it, but it changed my life and it will probably change yours too. And I think I'd say to graduates, we do need to keep fighting. We need to keep talking about this. We're only here today because the conversation and the noise has got so loud, and that is how policy change happens. And it's not fair that we've been punished for having the ambition to go to university. But I hope that the momentum that has come out of today and from the conversation more widely, we will have the opportunity to unfreeze our futures.
Well, can I thank our witnesses very much indeed. We've had Alex Stanley, Vice President of the National Union of Students, Kieren Walters from Prospect the Union, and Oliver Gardner, founder of Rethink, Repayment. A really interesting session, which is part of our work on intergenerational fairness, and we're hoping to produce a report on this before the summer. So if anyone interested, our next session is next week on the 10th of June in the afternoon, starting at 2:15 p.m, and we'll have the Chief Secretary to the Treasury, Lucy Rigbury, and the Skills Minister, Jackie Smith, in front of us to pick up some of the points. We're just finishing. So we're taking witnesses only. Sorry. And we're working on with our sisters committee, the Education Select Committee, that will be attending. Some of them will be attending next week's meeting. So can I thank you all very much indeed for your time. Order.